After a recent $1 billion of crypto liquidations, a lot of us are probably thinking about how we can improve our trading and avoid such things as getting totally liquidated. And one of the best ways for us small individuals to improve is to look at the big guys, those most famous and successful traders in the world, and see what they did, see what they recommended, and always keep these things in mind. So in this video, we'll look at some of the biggest brains in the crypto and stock market trading industries. Most of them started from humble beginnings and made their way to the top. So perhaps if we take a look at how they did that, we can learn from them and do the same. We'll start with Dr. David Paul, one of the most famous day traders in the world. Born to a middle-class family in Northern Ireland, he completed a BSc degree in engineering and migrated to South Africa in the early 80s, where he worked for the Anglo Group company conducting engineering research. After a decade of residing in South Africa, he quit the company he had been working for and started his own company, which manufactured mining tools for the South African market. Then he sold that company in 1992, and he joined the board of directors at the Riviera branch in the 90s and started teaching stock and forex trading. David Paul has held thousands of well-received seminars in the UK, Europe, and South Africa. His primary strategy in the stock market is to look for companies that match a certain criteria, that they're undervalued and increasing revenue aggressively while the market is in an upswing. Next, let's look at Richard Dennis, who's known for making $350 million off of a $1,600 loan that he got when he was younger. His trading career started when he was just 17 years old, and he worked at the Chicago Mercantile Exchange, delivering orders for traders. He then attended university on a scholarship, and after graduating, considered a master's degree, but then decided that he would rather directly pursue trading. His family loaned him $1,600, and he used $1,200 of it to buy a seat in the Mid-America Commodity Exchange, which left him with $400 for his initial investment in his trading career. In his first year of trading, he was able to increase this $400 to $3,000. Within 3 years, his capital was over $100,000. And the following year, he made a profit of $500,000 by trading soybeans and became a millionaire by the time he was 25 years old. But he didn't stop there. He became a multimillionaire by 26. Then during the 70s, when the Cold War was in full swing, the Soviet Union secretly bought 30% of all of America's crops, which meant that the market in the 70s was inflationary due to the lack of crops. And Dennis took advantage of that by focusing on food production companies, netting him over $350 million. After the financial crash in 1987, Dennis retired. If Dennis has one thing he regularly gives as advice, it's having rules and sticking to them. One of his famous quotes is that, "I always say you could publish rules in a newspaper and no one would follow them. The key is consistency and discipline." Next, let's take a look at Paul Tudor Jones. He's one of the best futures traders of all time and a well-known American hedge fund manager, the Tudor Investment Corporation, which he founded in the 80s. His company is diversified across industries such as global macro trading, commodities, and venture capital. Jones directly oversees the trading activities of the company and is always involved in trading, investing, and researching the global markets. Not to mention, he's also bullish on Bitcoin and other cryptocurrencies, believing that money will become digital in the future. He once famously stated, "The best profit-generating strategy I found was to own the fastest horse," implying that if you have the best resources at your disposal, you're unlikely to lose. As far as this fastest horse quote goes, it may sound a bit defeating for us little guys, as obviously we can't afford the fastest horse. But one takeaway we can get from that is to reinvest what we make into resources that are going to help us make more or trade better. The advice he pushes most is risk control and always learning. Another one of his quotes is, "I'm always thinking about losing money as opposed to making money. Don't focus on making money, focus on protecting what you have." Now, if you're looking to get in trading to make a profit, this might not make much sense. But if you break it down to its roots, one of the reasons that the rich get richer is that they realize fiat money is always going to have inflation. So if you want to retain the value, you need to be doing something else. But once you get good at doing something else to retain the value of your money, step by step, while being very careful, you can actually grow your money. The next guy we'll look at today is Bulkowski. He's a bit different than the ones we've talked about so far, as he's most well known for discovering and teaching new trading patterns to a wide audience. He authored some of the most iconic stock trading books on the market, including Encyclopedia of Candlestick Charts and Encyclopedia of Chart Patterns, which makes Bulkowski an authority on chart patterns. He started out as a hardware and software engineer before he started trading, and he made so much money trading that he decided to retire at the age of 36 and spend his time teaching the trading tips that he's learned. Since then, he's created the Pattern site, where he shares his discoveries with novice traders for free. His site receives hundreds of thousands of views each month and educates users on different trading patterns. There are over 900 articles and instruction guides on his website. So we don't actually need to look at his quotes for his advice. His free website is right there, and you can learn so much about chart patterns by using this free resource. So we'll put the link to that here and in the description. Lastly, let's look at Michael Burry. He's an American hedge fund manager and also known as one of the best traders of all time. He's the guy who was featured in the movie The Big Short, which was a box office hit featuring his experience of shorting the subprime market before the economic crash of 2008. Burry started from humble beginnings in the 90s, where he liked to discuss stock trading on the Silicon Investor Forum. He founded his first hedge fund in 2000 called Scion Capital, and his trading style attracted the attention of large investment firms such as Vanguard. In 2005, he shifted his attention toward the subprime mortgage market. He noticed that during 2003 and 2004, the bank's lending process in the United States would lead to a housing bubble that could collapse between 2007 and 2008. He acted on this information by lending over $1 billion from Goldman Sachs to place a bet against the US housing market, which turned out to be quite profitable. After the 2008 stock market crash, he closed his hedge fund and focused on personal investments. He's famous for short selling stocks and being bearish on popular stocks like Tesla, which he shorted until September 2021, by which time the price had doubled and he finally closed his positions. Yet, despite his bearish tendencies on popular stocks, he's actually been bullish in some undervalued stocks, such as GameStop, GME, and he claimed that it was undervalued even before the GameStop short squeeze of 2021. So let's look at a couple of Michael Burry quotes to get an idea of what we can learn from him. One of his quotes is, "People want an authority to tell them how to value things, but they choose this authority not based on facts or results. They choose it because it seems authoritative and familiar." Before we talk about that quote, let's pair it with another quote. "I've always believed that a single talented analyst working very hard can cover an amazing amount of investment landscape, and this belief remains unchallenged in my mind." So these two quotes can be quite encouraging for individuals looking to make profit trading, especially considering his history of successfully finding something that nobody else saw coming and profiting a lot off of it. Basically, with these two quotes together, we can remember to not always just put all of our trust on authoritative sources, and when we are looking at those sources, make sure that we have some reason that we're looking at them that's practical and scientific, rather than they just sound authoritative and they seem like somebody we should listen to. And secondly, even more encouraging, is the value of learning to analyze and really digging in, putting yourself into analysis of whatever you're looking at and using your own unique findings and insights to make trades that other people aren't seeing. After all, there's so much going on in the world, and therefore in all the kinds of markets, whether that be stock or crypto markets. If you really throw yourself into it and learn to do effective analysis, then there's no reason you can't find some great opportunity that nobody is telling you about that you just found for yourself, and often those will be the best opportunities to act on. So if you want to learn more from any of these guys, you can follow their social medias, buy their books, look at their websites, or intake their educational material in any form that it may be in. Whether you're looking to learn how to make money while the market is down, or you're just trying to use this time to learn and prepare for when the market starts going up again, a good resource, of course, is just following the advice and learning from some of the most successful traders in the world. Anyway, that's it for this video. Hope you guys enjoyed it. See you next time.